Welcome to Wealthion. I'm Wealthion founder Adam Taggart here with some of the top takeaways from the recent Wealthion Fall online conference, which happened this past Saturday. It was a phenomenal event. The faculty was stellar. The timing and the material couldn't have been more relevant to what's going on in today's highly uncertain markets. But I'm not going to tell you how great it was. I'm going to show you. I've got a selection of clips here from the speakers for you to watch and judge for yourself. The day started with Dr. Lacy Hunt, former senior economist for the Federal Reserve. Now, few people alive know more about how the Fed works and the people who run it than Lacy. Well, after giving a master's level seminar in the current challenges facing the economy, Lacy expressed his concern that the Fed is using the wrong model to guide its efforts to tame inflation.
The Federal Reserve is not using the correct model. They're focusing on basically the theory of inflation developed by the neo-Keynesian school, and to the exclusion of all of the other contributions to the concept of inflation. And this, in my opinion, puts them at a severe disadvantage because they have constitutional authority to control money. That's their role, but they're not focusing on the variable that they have the greatest control over. And so I think that the approach that they're using and his heavy reliance on the staff creates a vulnerability. But as for right now, the Federal Reserve knows the job that's ahead of them. If we do not contain the inflationary problem, then we're going to leave roughly 180 million of us in very dire straits. This cost of living crisis will continue. It will sputter. It will move up and down irregularly, but it will be with us for a long time to come.
Following Lacy, macro forecasters Grant Williams and Stephanie Pomboy debated which type of inflation, deflation, stagflation, or disinflation is likely to prevail from here.
Deflation will follow at some point. I just have no idea when. I think it will be further down the pike than a lot of people think, including Steph. I think Steph's going to probably take me to task now and tell me that I'm completely wrong. And I always enjoy when she tells me that. So Steph, have at it.
Oh my gosh. Well, I would never say you were completely wrong at all, but this will be a lively discussion, let's put it that way. Well, as you know, Grant, because you and I actually had this debate probably a year ago now. And I was firmly in the team transitory camp at the time, concerned more about deflation, and, have been spending the last 12 months wiping the egg off my face. Hopefully I got it all, but anyway, I keep coming back to this conversation that you and I had with Sam Zell, and he really summed up inflation, I think, so brilliantly. He said inflation is first an event and then a mindset. And what I've been struggling with is how we get from the event to the mindset, because that's the magic. If prices go up, and people imagine that they're going to come back down eventually, then it's hard to get inflation really to be more than transitory.
Then Brent Johnson, developer of the dollar milkshake theory, explained why the current dollar strength will likely kick into an even higher gear over the coming year.
But I think we are now getting into the early stages of this sovereign debt crisis that I have long thought was going to happen. And so I really don't think there's a way out of the dollar conundrum. And I think we're going to see a higher dollar. And I think a lot of it, not necessarily because things are so great in the US. In fact, I could make a big argument that things are not great, but it's just that they're better here than the rest of the world.
Bond guru Alf Peccatiello then decoded what the rising yields in the bond market are telling us, especially about the central bank's degree of commitment to getting inflation under control.
Central banks, on the other hand, do not have a choice, Adam. There is no room for nuances anymore. We're talking about the risk of a loss of credibility. And trust me, I've talked to policymakers because of my previous job running money. This is what they really, really care about. Their mandate number one is preserving credibility. If they lose credibility, there is nothing else that matters for them. So there is no room for nuances anymore when inflation is above 8%.
Market analyst Lyn Alden then rolled everything up, explaining that collectively, things don't bode very well from here for financial assets.
Look back in history, many assets actually do quite well when the Fed is tightening, because often they're tightening into an economic boom. They're tightening into a period of growth. Like, for example, when they were raising rates through 2017, they were raising rates into a rising PMI environment, right? And so that's generally more bullish for risk assets, not because of the Fed tightening, but because of all those underlying conditions that are giving the Fed confidence to tighten. But now, because they're tightening, entirely due to political concerns around inflation, that's a much uglier type of tightening, because they're tightening despite the fact that they have, decelerating economic conditions, and that is historically a very bad cocktail for risk assets.
Then real estate analyst Nick Gurley joined in to declare that the next crash in the housing market isn't ahead of us, it's already underway.
Housing market is a mess right now. One of the metrics I'm looking at that's showing big problems for the housing market is home sales. The number of homes being sold in a given month is now down 20% year over year, and it's actually at the lowest level since 2014. And those declines in home sales, the big shift over the last couple of months is that those have now been causing declines in prices now in many markets around America. We're actually seeing home prices go down, which, as you said, that's kind of crazy, because 6 months ago, no one in the mainstream would have said that a housing slowdown was possible. And now you read the headlines, everyone is getting on board with the idea that the housing market is starting to crash.
Award-winning journalist Matt Taibbi shared that he's seeing many of the same excesses and abuses that he saw on Wall Street leading up to the 2008 global financial crisis. And this time, he sees real social unrest resulting.
So we had roughly $6 trillion injected into the economy in the 2 years after the beginning of COVID. And so this has had a profound impact on the economy. It's had a profound impact on the gap between the rich and poor. And I think it's had a profound political impact because of that widening gap between the rich and the poor. And because these decisions are made by an unelected bureaucracy that meets essentially in secret.
Matt was followed by energy expert Doomberg, who forecasts that the current global energy crisis will be with us for quite a long time.
There's still some gas flowing from Russia through Ukraine, but is a fraction of the historical averages. And unless something changes very quickly, despite the sort of the noise around improved storage levels, we don't think that the bulk of Western Europe will get through the winter without some form of rationing, unless we see unusually, seasonally warm weather, which would be great. But right now, as it stands, unless flows increase, there's no amount of storage that can abate the reduced flows from Russia, Nord Stream 1 in particular.
Then hard assets investor Rick Rule joined to share while he's actively and aggressively buying resource stocks right now, given their current low prices.
The whole world, but particularly the resource sector, has gone risk off. But what that means for Rick Rule, a determined contrarian, is that I'm going risk on. I'm going down the quality scale, down to the micro caps from the majors. I'm chasing aggressively the illiquid part of the markets, where I have to be right relative rather than really sort of playing the momentum.
GoldSilver.com's Mike Maloney then gave the audience a sneak peek of the key conclusions from his upcoming new book and explained why sound money will be the key to both individual wealth building and national prosperity going forward.
Investing in gold and silver was the best decision I've ever made. I bought this tube of gold eagles, 20 gold eagles, back in October 2002. So I am coming up on the 20th anniversary. That cost me $6,500. It was recently $40,000. Today it's about $35,000. But I've way outperformed the stock market. And the whole time I've had much more of a sense of safety, because this cannot go to zero. Anything else, this is an asset. I don't have to rely on the performance of some company and then a counterparty like a brokerage firm or something to make this good.
All these speakers were then followed by a video montage of many of Wealthion's experts, including Luke Groman, Sven Henrik, Simon Hunt, and a number of others sharing their favorite metrics that they rely on to gauge where things are headed. If you watched my video last week about Van Halen and the brown M&Ms, you'll know what I'm talking about here. And if you didn't watch it, here's a link to go do so. The conference finished up with an hour-long Ask Anything Q&A session with Wealthion's endorsed financial advisor. No question was too big or too personal. We fielded any and every topic the audience, made of folks just like you, wanted answers to. So now you've got a taste for what happened at the conference, but just a small one. I've only shown you a few minutes here. The conference lasted for over 9 hours. It was jam-packed with fantastic insights. If you're disappointed you missed out, well, don't be. Replay videos of the full event, all the presentations, all the Q&A, the archive of the live chat from the day, plus a bonus video from mining analyst Jeff Clark sharing his latest outlook on the precious metals mining sector and giving an update on his GDX Jeff portfolio. Replay videos of all of this are available for purchase by simply going over to wealthion.com/conference. Head over there now if interested. It really was a fantastic experience, bringing so many great minds together, both our faculty of experts and our audience of curious-minded viewers just like you. These make these conferences my favorite days of the year. Thanks to everyone who participated in the event, and thanks to all of you for watching.